Recognizing hidden charges in banking services. The money you never notice leaving. Look at your bank balance. Really look at it. Now ask yourself this question. Did every dollar leave your account because you chose to spend it? For most people, the honest answer is no. Some of that money vanished quietly, silently, without permission that felt real. This is not theft. This is not fraud. This is something far more common. Hidden banking charges. They do not announce themselves. They do not feel dramatic. They do not happen all at once. They happen slowly. $5 here, $10 there, the $35 when you least expect it. And over time, those small charges become hundreds, then thousands, then tens of thousands over a lifetime. Today, we expose them. In this video, you will learn how banks legally take money without clear warning, where fees are buried, why smart people still fall for them, and how to stop paying them forever. This knowledge is not advanced finance. It is financial self-defense. What hidden fees really mean. Hidden fees are not always invisible. They are obscured. They are wrapped in legal language, long documents, confusing terms, automatic settings. Banks rarely lie. They simply overwhelm. A hidden fee is any charge that you did not clearly agree to, you did not fully understand, you did not notice until after it happened. If you did not expect the fee, it was hidden. Why banks depend on fees? Banks are businesses. Their goal is not convenience. Their goal is profit. There are three major profit engines. 1. Interest. 2. Investments. 3. Fees. Fees are the most reliable. Why? Because fees are predictable. Fees do not depend on markets. Fees are paid by customers automatically. Banks earn billions every year from fees alone, and the most profitable fees are not obvious ones. They are the ones people do not fight. Banks understand human behavior. They know people rarely read long documents. People trust familiar institutions. People blame themselves before questioning banks. If a fee appears, many people think, I must have done something wrong. That assumption is powerful. It keeps people silent. When you open a bank account, you receive terms and conditions, account disclosures, fee schedules. These documents can be 30, 50, even 100 pages long. They are written by lawyers, not for clarity, but for coverage. Most people scroll, click, agree, and move on. That moment is where hidden fees begin. Let us start with one of the oldest fees, the monthly maintenance fee. This fee charges you simply for having an account, keeping money with the bank. Typical amounts: $5, $10, $15 per month. That is up to $180 every year. Banks say this fee is avoidable, but avoidance requires a minimum balance, regular deposits, specific activity. Miss the requirement once, the fee appears. This fee punishes inconsistency. Banks may require you to keep $500, $1,000, $1,500 or more. Drop below that amount, even briefly, you are charged. This fee hits hardest when emergencies happen, income is irregular, expenses spike unexpectedly. The system is designed so that those with less money pay more penalties. ATM fees are deceptively small. That is why they work. You send out-of-network ATM ender charges you. Your bank charges you 2 fees, 1 withdrawal. Each fee feels minor. Together, they are expensive. Frequent ATM use can cost hundreds per year, thousands over time, and most people never calculate the total. Overdraft fees. Overdraft fees are not proportional. Spending $2 more than you have can cost you $35. Do it twice, $70. 3 times, over $100. Some banks reorder transactions, process large purchases first, trigger multiple overdrafts. This practice has been criticized for years, yet it still exists. Because it works. Insufficient funds fees. NSF stands for insufficient funds. If a payment fails, you still pay, even though the purchase did not happen. The service was not delivered. You lose money anyway. This fee is punishment without benefit. Paper statement fees. Banks once mailed statements for free. Now some charge for it. Why? Because digital delivery is cheaper for them and profitable. If you do not opt out, you pay inactivity fees. Not using your account? That can cost you. Banks may charge a fee if no transactions occur 4 months. The account appears inactive. This affects savings accounts, emergency funds, old accounts people forget. Money disappears quietly. Foreign transaction fees. Buying online from another country? Traveling? Many banks add 2% to 3% per purchase. These fees are rarely obvious at checkout. You notice later, when it is too late. Account closure and language manipulation. Some banks penalize loyalty loss. Close an account too soon. Pay a fee. This discourages switching and keeps customers trapped. Harmless sounding fee names. Fee names often sound harmless. Service charge, adjustment, convenience fee. The language minimizes the impact. Confusion reduces resistance. Do this monthly. Read every line. Look for unfamiliar names. Compare month to month. Patterns reveal intent. Choose accounts with no monthly fees, no minimum balances. Free ATM networks. Online banks often outperform traditional ones. Set alerts for low balances, withdrawals, fees. Prevention beats reversal. Most people never ask. Banks expect that. A polite request can reverse the fees, remove charges, upgrade accounts. Silence costs money. Always ask. What fees exist? How are they triggered? Can they be waived? If answers are unclear, walk away. A $10 fee per month is $120 per year, $1,200 per decade, $4,800 over 40 years. That is real money, lost quietly. Hidden fees survive on ignorance. Awareness destroys them. Your money deserves respect, and now you know how to protect it. Hidden banking fees do not target unintelligent people. They target busy people. They target workers' parents, students, entrepreneurs. Anyone with a full schedule. Intelligence does not protect you from complexity. Banks design systems assuming you will not check every charge, you will not read every document, you will not question small amounts. A $5 fee feels harmless until it repeats. Banks understand psychology. They know that $5 feels insignificant, $10 feels manageable, $35 feels painful, but rare. But frequency matters more than size. A small fee repeated often does more damage than a large fee once. This is how hidden charges stay invisible. Modern banking is automated. That sounds convenient, but automation also means fees are triggered instantly. Fees are applied without human review. Fees happen while you are not watching. Direct debits, auto payments, scheduled transfers. All of these can trigger a fee silently. By the time you notice, the money is gone. Many banks offer overdraft protection. That sounds helpful, but often it means the bank covers the transaction, then charges you a high fee. You are not being protected. You are being charged for a loan you did not ask for. Some banks allow you to turn this off. Choose transaction declines. Instead, declines are embarrassing. But overdraft fees are expensive. Some banks process transactions like this. Largest purchase first. Small purchases afterward. Why does this matter? Because the large purchase drains your balance. Smaller ones then trigger overdrafts. One low balance day becomes multiple fees. This is not accidental. Some banks charge an overdraft fee, plus a daily fee for each day the balance remains negative. This means one mistake can cost you 4 days or weeks, even after the original purchase is forgotten. Savings account fees. Many people assume savings accounts are safe. They are not always. Possible fees include minimum balance fees, excess withdrawal fees, inactivity fees. Saving money should not cost money, but sometimes it does. Some savings accounts limit monthly withdrawals, transfers exceed the limit. You pay a fee. This fee surprises many people because it feels outdated, but it still exists. Student accounts often start fee-free, but only temporarily. And graduation happens, age limits are reached. The account converts. Fees appear. Many people never notice the change. Senior discounts and assumptions. Some banks offer senior discounts. Others do not. Assuming fees are waived without confirmation can be costly. Never assume. Always verify. Business banking has more fees, higher fees, more conditions. Examples: per transaction charges, cash deposit fees, wire transfer fees. Small businesses often lose money to fees without realizing it. Sending money by wire is expensive. Domestic wires, often $15 to $30. International wires can exceed $50. Receiving wires may also cost money. This surprises many people. Some banks charge businesses to deposit cash. Yes, you may pay to give the bank your money. Fees increase after a monthly limit. Checks are declining. Fees are not. Possible charges include check printing, stop payment fees, return check fees, each one adds friction, and cost. Lose your debit card? Some banks charge. Replacement fees, expedited shipping fees. Even accidents can cost money. At some ATMs, checking your balance costs money. You pay to see how much money you have. This feels small, but it adds up. Some banks charge for SMS alerts, text notifications. Digital convenience can come with hidden costs when traveling. ATM fees, foreign transaction fees, currency conversion markups. One withdrawal abroad can trigger multiple charges. Banks often use unfavorable exchange rates, add hidden margins. You do not see this as a fee, but it is. A fees often post at the end of the day, overnight, after business hours. This delays awareness and reduces your ability to respond. Reasons include the fee feels small, customer service takes time, people doubt success. Banks rely on this hesitation. Every unchallenged fee is pure profit. The art of fee reversal. Many fees are reversible, especially if it is your first occurrence. You have a good account history. You ask calmly. CAF strategies. Be polite. Be specific. Act quickly. Never assume. No is final. Keep records of dates, amounts, conversations, documentation shifts power back to you. Online versus traditional banks. Online banks often have fewer fees, lower overhead, simpler policies. Traditional banks have physical branches, higher operating costs, more fee reliance. Neither is perfect. Partner and recurring charges. Some banks partner with services. Charges may appear automatically under unclear names. Review recurring transactions carefully. Think like this. Every service has a cost. Every fee has a trigger. Every charge has a reason. When you ask, why, you regain control. Once a month. Review statements. Highlight unfamiliar charges. Compare with previous months. 10 minutes can save hundreds. Some people separate spending, saving, bills. This reduces overdraft risk and fee exposure. Automation is powerful and monitored. Set rules. Set alerts. Review monthly. Automation without awareness creates hidden losses. Switch if fees increase frequently. Policies change without notice. Customer service avoids clarity. Loyalty should not be punished. Fees do not just cost money. They create stress, anxiety, distrust. Financial peace requires transparency. This is not about hating banks. It is about awareness, choice, control. Informed customers are powerful customers. Let us walk through a normal situation. A typical person opens a checking account. Nothing fancy, nothing risky, just a place to store money. The bank advertises free checking. But here is what happens over 1 year. Month 1. The balance drops below the minimum. Just once. A maintenance fee appears. Month 2. An out-of-network ATM is used twice. 2 ATM fees. 2 bank fees. Month 3. A bill posts earlier than expected. 1 overdraft fee. Month 4. Nothing unusual. But a paper statement fee appears. Month 5. A small subscription renews. The account dips slightly negative. Another overdraft fee. By the end of the year, the account holder lost hundreds of dollars. No fraud. No mistakes. Just systems. People remember big expenses. They forget small ones. Banks know this. They rely on memory gaps, time gaps, emotional distance. Many people have a checking account, a savings account, a backup account. Each one may have different rules, different fees, different triggers. Confusion multiplies costs. What you understand for one account may not apply to another. Savings accounts feel passive. You do not use them often. That is the danger. Inactivity of fees, minimum balance fees, transfer limits. A forgotten savings account can slowly drain itself. How to read a bank fee schedule? Most people glance. You should not. Instead, print it, highlight a fees, look for conditions, pay attention to words like may, up to, at our discretion. Those words mean flexibility for the bank, not for you. When a document says a fee may apply, it means the bank reserves the right to charge you, not sometimes, anytime. Many accounts start fee-free, but only temporarily. After 3 months, 6 months, 12 months, the rules change. If you do not notice, the charges begin. Banks may notify you, but notifications can be delayed, missed, buried. Never rely solely on alerts. Active review is essential. Imagine this. You have $40. A $45 bill posts overnight. Your balance becomes negative. Overdraft fee applied. The next morning, 2 small purchases post. Each triggers another overdraft fee. Total cost over $100 for being short $5. This is not rare. Options include linking savings carefully, turning off overdraft coverage, keeping a buffer balance. No option is perfect, but awareness reduces damage. Subscriptions, the silent drain. Subscriptions often renew automatically, increase in price, go unnoticed. If they trigger overdrafts, the cost multiplies. Once every few months, list recurring charges, cancel unused services, align billing dates. This reduces fee exposure. Debit cards, pull from your balance, trigger overdrafts. Credit cards, do not overdraft, may charge interest instead. Each has risks, but debit cards carry more fee exposure. Using a credit card for cash triggers a fees, starts interest immediately, has higher rates. Many people discover this too late. Comparing banks properly. Do not compare advertisements. Compare fee schedules, account rules, waiver conditions. Marketing hides reality. Documents reveal it. Money lost to fees. Cannot earn interest, cannot be invested. Over decades, the opportunity cost is massive. Banks do not educate you. Education reduces profit. Confusion increases it. This is not personal. It is structural. Knowledge alone fades. Habits last. Make fee checks routine. Using credit cards strategically to avoid fees. Some people use credit cards for daily spending. Why? Because credit cards do not overdraft, transactions are delayed. Cash stays in checking longer. This can reduce fees, but only if balances are paid fully. Credit cards solve fee problems. They create interest problems. If balances carry over, the cost is worse than fees. This strategy requires discipline. Debit cards. Pull immediately. React to timing errors. Trigger overdrafts. They are simple, but unforgiving. Some banks allow daily limits, transaction caps. These limits prevent mistakes, reduce damage, small barriers save money. Alerts should be early, specific, actionable. Examples: balance below buffer, large transaction posted, full charged. Generic alerts are noise. Specific alerts are shields. You do not need daily monitoring, but weekly reviews. Catch patterns, spot errors early, prevent escalation. 5 minutes a week beats hours of damage control. Once a month, review statements, compare foot totals, look for trends. This turns randomness into data. Once a year, compare your bank to others, review fee changes, reassess account fit. Banks change rules. You must respond. Banks know. Switching feels hard. People avoid paperwork. Heck, loyalty delays action. Inertia is profitable. Awareness breaks inertia. Switching is easier than it seems. Steps: open new account, move deposits, Update autopays. Close old account. Do it slowly. Avoid overlap fees. Mistakes include closing too early, forgetting subscriptions, ignoring final statements. Patience prevents new fees. How to read bank comparison sites. Critically, comparison sites. Highlight benefits. Minimize drawbacks. Always. Check official fee schedules. Read customer complaints. Look for patterns. Marketing is selective. Reality is detailed. Not all fees are evil. Some pay for speed, access, specialized services. The key is choice. Unexpected fees are the problem. Intentional fees are known, are chosen, serve a purpose. Hidden fees, surprise, confuse, drain. Always distinguish. Why fee awareness is a life skill. This is not just banking. The same patterns exist in telecom, insurance, subscriptions. Learning here applies everywhere. If this video helped you see your money differently, if it made you pause and think, or if it saved you from even one hidden fee, then take a second to support the channel. Like this video. It tells YouTube this information matters. Subscribe so you do not miss future videos on money, banking, and financial protection. Turn on notifications because the next video could save you even more. And most importantly, share this video with a friend, with a family member, with anyone who checks their bank balance and wonders where the money went. Because the more people understand how the system works, the less power hidden fees have. Thank you for watching. Stay informed. Stay in control.